Okay. Hey everyone, welcome to the 8th and final video of this bootcamp. Thank you so much for joining me. I really enjoyed making it, and I genuinely hope all of you got some value out of this, and maybe it started your trading journey. Maybe you already know a bit, but thanks for coming along. So we've started from the basics. I taught you guys how to set up a paper trading account, what's trading view, what's a trade, what are we trading, how are we trading it, and we went over the technicals, what's liquidity, what's a fair value gap, all these really important things. Now I want to go over mentality, okay, because I really want you guys to listen closely here. I don't want any of you to underestimate the importance of a strong mentality in trading, okay? There are 3 pillars to trading. The first one is risk management, the second is psychology, and the last is technicals. You'll see I have nothing written here because we've already gone over the technicals. The only piece of advice I can really give you is to be a student, okay? Watch more videos. Even if they're not mine, watch more videos. Get a mentor. It could be me, it could be someone else, but learn. Be a student. I love that quote, be a student, okay? Keep learning, love what you do, enjoy the process, and learn, okay? That's it, that's all I can tell you to do. But these are at least 75% of trading, okay? Because I know people with amazing, qualifications, so to speak, in terms of trading. They understand the technicals, and I could explain to them extremely complicated concepts and they'd understand it, okay? But 75% of trading that is not technicals is what is holding them back from trading success, okay? Let's go over them. So risk management. Here, I have a risk management blueprint, okay? Is this gonna somehow make you a perfect risk manager? No, but I really want you, if you just follow what I say here, you can be successful. Okay, so listen closely. So number 1, if you have a $100,000 account or a $50,000 account, or like a funded account, or it's personal, whatever, it does not matter the size, you're going to be risking the same percentage, or at least the same fixed value per trade. Okay, so if I have, for example, I have 250K funded accounts. Okay, so on one of those, how much am I going to risk per trade? Usually I will never go above 0.5%. Okay, and that's just based on that firm's rules. Okay, you have to understand your firm and you have to risk accordingly. Okay, you cannot over risk. You have to ask yourself, what am I willing to risk on this trade? What am I okay losing? That's your risk, okay? Number 2, assign a minimum risk to reward. So this is just something I recommend for new traders. Usually this isn't really a big deal for more experienced ones, but you should have a minimum risk to reward. So for me, it's a 1-to-1. So my typical risk to reward is maybe a 1 to 1.3, 1 to 1.5, which some people say is low, but it's what works for me. Maybe you're a 3-to-1 trader. It doesn't matter. All of them are valid, but you should have a minimum because it stops you, assuming you follow the rule, it stops you from taking a trade, it going in profit, and then you getting out early at a 0.2 RR when the trade's a 2 RR, and you're making so little money so that when you lose a trade, you're losing however many wins. So you really want to have a minimum. Okay, my minimum is a 1-to-1. Why do I like a 1-to-1? Well, if I win and then I lose, I'm break even. Okay, it's pretty simple. Number 3, don't move SLs, stop losses, or TPs, take profits. This should be a no-brainer, but it's crazy how your mind plays tricks on you. It becomes easy to do in the moment. Don't move them, okay? If price initially is tending towards your stop loss, and your stop loss should already be placed, right as you enter the trade, you should know where your stop loss is gonna be. And once you place it there with a limit order, you should not touch it, okay? If it starts, because that's your assigned risk. If it hits your stop loss, you're okay with that loss. Once you start moving your stop loss lower for a buy case or up for a sell case, you're putting more risk on the table that you weren't prepared for in the beginning. So you're just pretty much destined to blow your account at that point because you're gonna move it. It's gonna be a cascade, okay? Then you're gonna keep moving it, and your account's blown, okay? Leave your SL where it was. In terms of take profits too, if you keep moving your take profit up and it reverses back to your entry or your stop loss, you just gave up on money, okay? You wanna have a set amount of money you're gonna make, a set amount of money you're gonna lose. Don't touch it, okay? Have a BE target, number 4. This is maybe optional. It depends on your trading style. I personally love having a break-even target because it saves me a ton of losses, okay? So pretty much once you take a trade, let's say it's a buy right here, stop loss is here, take profits up here, it goes up, boom, 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 to like a certain part, okay? And you're gonna assign this before you enter the trade. It gets to a certain area above in profit where you're gonna move that stop loss from here to break even, okay? and that way you're not going to lose money if it retraces back. Very useful because it goes back to your entry and then goes to your stop loss. Some people, myself, would have wished I got out of that trade for break even. It's just how my personal strategy works. You saw in the last video, if you watched the backtesting session, that's how I trade. So kind of get a feel for it. If you want to trade how I trade, definitely have a break even target. And number 5, set a max number of trades. So for me, I take however many trades. I don't have a limit, but if I take a trade and it's not break even, I'm done for the day. So if I take a trade and I win that first trade, I'm I'm done. I'm done for the day, at least on that account. Okay, if I have other accounts, then I'll trade them. But one trade, positive or negative result, I'm done. So win, done. Loss, done. I know people where it's 2, 3. For me, it's what works for me. It's what works best for my psychology. So that's what I do. Please set a max number of trades. If you can do all those things, you're an expert risk manager. You got that done. 2, psychology. My psychology blueprint. Okay, here's what you should follow. Okay, number 1, turn off P&L. So what you're gonna do is you're gonna go in TradingView. We're on TradingView right now. You're gonna right click on the chart, settings, go to trading, and then profit and loss. You should have positions enabled here. Profit and loss, it will by default be set to money. So when you're in a trade, it'll show you how much money, like in dollars, you're up. I'm gonna recommend changing that to ticks or to percent. I like ticks, okay? And pretty much so instead, if you go on my reels, I never show dollar profit, at least not currently. And so pretty much it just shows me how many ticks, so how many tiny little ticks of the NASDAQ I'm up, okay? That's better on my mental and better on pretty much everyone's mental. I mean, it makes sense because when your brain sees money, it's gonna wanna close that early or do something reckless. But if you just see ticks, you're not focused on the money, you're focused on the take profit and the stop loss. That's better. Number 2, set limit orders, okay? So this means if you have a take profit, don't leave it mental. Okay, so if your take profit, I don't know, is gonna be at like a price, so 32K. Set a limit there. Don't just get out because you're more likely to follow your rules when you don't have to do anything. So if you get in market, you buy here, and you know your stop loss is here, for example. But once it gets down there, are you gonna have the willpower to press the X on your position and close it? Some people might say no, especially for beginners. So set a limit there. Set a limit and walk away. It's gonna help you with those decisions. Number 3, journal each trade. I do not know a single profitable trader who didn't at least journal a little in the beginning. I don't anymore because I'm profitable now, but in the beginning stages, even I honestly should journal. It's something I should probably do, but as a beginner, 100% you're gonna have to journal. I did. Please do that. It's pretty simple. It's literally just write why you got into the trade, maybe take a screenshot of it, write maybe how you felt during the trade. If you made a negative decision, write it down. If you made a good decision, write it down. Okay, it's gonna give you data so you know what you're doing wrong and you know what you're doing right. Number 4, create the phrase, okay? This is a phrase that I say to myself before I hop on the charts. And sometimes if I have to make a tough decision, it's a question I ask myself. And for me, since it's kind of personal to me, I'm not gonna say it here. It's just kind of it's a personal thing. I want you guys to think about what are your motivations to trade? Why are you doing this? And that should be what you say to yourself. And if you have to make a tough decision, I want you guys to have a question that you ask yourself, okay? Like something like, is it worth it? But something more deep to you, personal to yourself. It's gonna help you make right decisions. Okay, technicals I already explained. Be a student. Okay, last thing I'm gonna go over here. Every bad decision made in trading is rooted in the human desire to avoid pain. This might sound a little random, but I'm just gonna explain it. So pretty much, let's say you wanna get in the gym and start getting fit, right? Well, if you don't go, you're avoiding pain, right? Because it's hard to be in the gym, right? It's also hard to be at home and not be fit, but it's hard to go, right? What I want to explain here is that literally the root of every negative decision you could make is rooted in exactly this, just you wanting to avoid pain. I want you guys to hold yourselves accountable, okay? Because really, you might make a decision and you might be able to justify it with words, but really, you're just not being a professional, okay? And a professional would deal with the pain and get on with it, all right? So I want you guys to read this closely, okay? So decision. So these are negative decisions that are common in trading. So closing early. So you're in a trade, it's in profit, but you get out early, in profit, closing a little, right? Your reason is can't go broke taking profits. And a lot of people say that, and that is completely wrong, because what if you keep taking profits once you're a little up in your trade? You're like, oh, I'm making money. Once that trade hits your stop loss for the first time, you just lost 5 trades worth because you were taking so little profit, right? You need to hold to your target. So your reason is this. What's the real reason? It's avoiding the feeling of it reversing back down, okay? You're in profit, you got dopamine, right? You're happy, it goes back. That's pain, that's painful. So you wanna avoid that feeling. That's the real reason. So next one is moving a stop loss. Your reason is I need to give this trade room, right? So you're in a trade, boom, boom, stop loss is here. I need to give the trade room because it starts coming down the stop loss, like, oh, I'm gonna give it some leeway. No, bad call. And you know it is, but you're telling yourself these good things, okay? Real reason is avoiding realizing the loss. Realizing just meaning, if you're in a position that's unrealized loss, you haven't actually lost that money until you click sell. Clicking that sell button is painful. I'm not even gonna lie, even to me now, when I'm stopped out and it fills me, remember I have limit orders, I don't just get out with my mind, I have a limit order. Once it hits it, it is painful, but I'm a professional, I deal with the pain, okay? That's the real reason. Third, moving take profit. So we talked about moving stop loss, now we're talking about moving take profit. You're in profit, it hits your target where you thought it was gonna go, your analysis is correct, but you move it higher in a buy position or lower for a sell position, but we're talking about buys. Your target's here, okay? Entry, stop loss. You move it up, okay? And it's because you're greedy. Your reason is, oh, I need to make X dollars today. You have a money target in your head, like, oh, I want to make 500 per day. You need to get that mindset out. Some days you're gonna make 1,000, some days you're gonna make 10, 100. It really depends on your account, but you can't have a money goal, or because if you're watching that P&L, remember I told you to change it to ticks, not money, but if you're up, you know, however much is a lot of money to you, maybe 500 is a lot to you, your target's 400, you're like, oh, I want that little extra to get that extra 100. No, man, you gotta close where you think it's gonna go, because anything after your target's no longer high probability. What you're scared of, or the real reason, is avoiding missing the whole move. You wanna catch everything. You wanna catch all the money you could possibly make, and it's painful not to do so. So you're avoiding pain. Okay? Once again, same thing. It's always just avoiding pain. Over trading. This is when you take 1-2 trades. You know, you're done. You say to yourself, oh, maybe I'm done for the day. Good trading today. But you see another opportunity, and you take it, and you start over trading. Same reason is here. I need to make X amount of money today, because let's say you took one trade that was a win, one trade that was a loss. The win was a little more than the loss, but you're still greedy. You want more. I need to make this amount of money today. Real reason, avoid missing every move. So this is the first one here. Avoid missing the whole move. So you want to catch everything. Every move is like, oh, there's an opportunity to get in long here. Boom, I'm taking it. Entry here. Boom. Entry here. Eventually, you know, it's going to lose. You might have had a green day, but you overtraded and it went red. Once again, avoiding pain, because it is painful to miss moves, okay? Last reason, under trading. This is a topic that's not talked about very often, but under trading is a real thing, okay? So your reason is, I need the best setup. So for example, there could be a really good opportunity, but you don't take it just because there's some tiny inconsequential thing that's telling you it's not good enough. Sometimes you just have to make the decision and take a risk, okay? Trading is about taking risks. So there's over trading and there's under trading. You do have to end up taking a trade if the opportunity presents itself. You can't be fearful, okay? That's another emotion. The real reason is avoiding taking a loss. Taking a loss is painful, and you want to avoid that, so you don't even take a trade in the first place. This is avoiding pain, this is avoiding pain, all of them are avoiding pain. That's really what you're doing. You need to be a professional, okay, and learn to deal with that pain and wrestle with it, okay? Every single day I deal with pain in the markets, but it's part of the job, okay? At your job, whatever you work at, it doesn't matter. You experience pain constantly, mental and physical. Same thing with trading, it's not easy, okay? If you can learn to deal with this, you're gonna be successful, okay? Thank you so much for watching my bootcamp, guys. This is the last video. I'll, of course, continue making content, whatever. If you wanna see me active, you know, making content, and you can come and talk to me. My Discord is the link in bio. I'd love to see you in there. Once again, free and paid plans. I'm completely transparent about that. But yeah, go get your free PDF down there. Lots of value. So thank you so much, and I'll see you in there, hopefully. Bye. Let's go.